Hi everyone, let's look at the low time frame bullish and bearish scenarios, including the potential trading setup and the status of what we got at the very low time frame. So starting with the bearish scenario where we're potentially looking for a 1-2-1-2, before then a bigger 3 to the downside, which should be a very impulsive wave where volume should be increasing as price is going to the downside. At the moment we did have one big volume spike, but you want to see this continue to the downside. And also the minimum target of this yellow 1, 2 and then eventually a 3 to the downside is the 1.618, and as it stands now, of course, we haven't reached it yet. So that also means that if we look at the wide count, because we have a 1, 2, 1, 2 and then in wide another 1, 2, 3, 4, 5, that this wide wave 5 and therefore the yellow 3, you want to see it end somewhere around the 1.618 or further down, because a wave 3 can extend to much lower prices. But in this scenario, this then is a 1, 2, this is wave 3, this is then a wave 4 in the making, before then eventually a wave 5 to the downside, which then also hits the target box, which is the blue box that you see over here between 28.2k and 27.8k, with a couple of nice confluences in this area as well, which for me is a very interesting target area in general. So basically this then is the low of wave 3. We expect a little bit of a range to form where the minimum target, 0.236, usually as a common target, is already hit, but another common target, and actually the most common, is the 382 sitting at 29.3k, and the 0.5 is also quite common actually, but you don't want to see candles close above the 0.5 fib, as that would invalidate a wave 4 scenario for then another move to the downside in a wave 5. So basically taking this high as a swing failure pattern, something like this, is absolutely fine. That's okay as long as we don't close above the 0.5. But if price is going to continue to the upside, then for me this scenario becomes a lot less likely. If we then go to the more bullish scenario, let's say we're looking for this to be a WXY. So that means this is a 3 wave in a W, a zigzag move in wave X, and then we're looking for another zigzag structure in wave Y, where this is then an impulsive move to the downside, a 5 wave structure, followed then eventually by a 3 wave move to the upside, and then another 5 wave move to the downside. Now what I'm looking for in this scenario in particular is then a 3 wave move to the upside in a wave B after this impulsive move down. I gotta say though, that also in this scenario there might be another 4 or 5 to come, right? Because we have a 1, 2, and on the lower time frames you can count another 1, 2 over here. So this might be a 1, 2, 3, 4, 5 in a bigger 1, 2, 3, 4, and potentially a 5. Now for the potential trading setup as shown over here, and we'll go in the lower time frames, but that basically means that eventually when price is going to move to the upside, the stop loss should definitely go at break even to be safe. Educational guys, because it's based on Elliott Waves, we're on YouTube, you know how it goes, for at least taking into account that price might go to the downside once more, but we have to wait and see, because if price goes to the downside, it already was very close, actually just missed out on hitting the 1-to-1 over here. But if price is going to go down once again and enters this target area over here for already a potential WXY, so this target area over here is the most common target for a wave Y, in this then being a WXY. And as you can see, this first wave in a potential Y wave, which is a 3 wave structure, went all the way to basically the 1-to-1, which is very deep. So if it goes down again, you know, it's a very deep first wave of a wave Y already getting into the target area. Now imagine that this is the low at the moment, right? And we are in a corrective move to the upside. Then if price is going to enter this area over here, which is basically quite a gap, I can imagine price can push to the upside, where my main interesting target will be the order block that we have on the 1 hour with the 786 included as well. And also if we then pull a trend-based fib extension from the high of X to the low over here to then the potential high that is going to be made around the 786, the target area for a wave C, in this then being an A, B, C to the downside for wave Y, is right about here. So you can see the 1-to-1 has confluence with the more common target of a wave Y as well, and we have confluence with the blue target box, which for me is a very important support area for Bitcoin. If we then zoom to the lower time frames to see a little bit about what's going on, you can see that my wiggly line over here was actually a 5 wave structure, and so far this move up has been a 3 wave structure. That also means that this scenario as it stands now is a bit more risky, because if you see a clear 5 wave structure and then a retracement, one can can expect this to be a first impulsive move or a wave A, followed by a B, and then eventually a wave C. But this is a three-wave structure, which opens a lot more possibilities. Either this is a three-wave move up, three-wave down, and then eventually a three-wave move up, which is then a WXY, or this is an A, then you get a B, and then eventually a C to the upside. So it can be a mixed bag of things. And also you can see that if we would have a move to the upside in a nice wave structure, then a move to the downside, I want to see, or preferably would like to see, some bullish divergences. So we have the low over here, price making a higher low. But currently on the yellow line, if we take this wick on the 50-minute, then yes, over here, this low that was made has created a bullish divergence. So a higher low made, but a lower low on the yellow line as well as a lower low on the blue line. So there is a bullish divergence, absolutely. We also had over here the bearish divergence between this high and this high, lower high on price, higher high on the yellow line, CVD over here. But that one already played out. So yes, the bullish one is remaining, but I do think it is important to at least realize we did have some bearish divergences going on over here as well. And if we move to the 5-minute, then you'll see that also over here we had a lower high formed, and then the blue line showed a higher high. So we had some bearish divergences, very local, but as you can see, the bearish divergences, this one also played out already. So the bearish ones already played out, the bullish one did not yet play out. The only thing as mentioned that I don't like is that even though price is moving to the upside and has created bullish divergences, we have created twice in a row bearish divergences. Yes, they have played out, but still there's bearish divergences during the bullish divergences. And you know what, you can feel that I'm not that like confident. Yes, price can move to the upside, absolutely fine, you know, but it's not the best case scenario that you like to see with a potential Elliott wave type of move, right? Where yeah, okay, you do have a bullish divergence over here, but you had a bearish one over here, and on the 5-minute a bearish one over here as well. While usually this setup would have been nicer if you have this wave structure to the upside, price just moving down with no divergences whatsoever, then creating bullish divergences without showing any bearish divergences. That would have been a lot nicer, but that is not what we got. So that is at least something to take into account and keep in mind, right? So yeah, that is basically it. I hope this video was helpful or valuable to you. I'd like to thank you for watching. Please check out the macro and high time frame video if you're interested for the more higher time frame stuff, and thanks for subscribing as well. I'll see you at the next one. Bye bye.